Check. Bang on time. Cool. 2 minutes late. Check. Welcome, everyone. My name is Rehan. I am the General Manager of FinTech Australia, and I'm glad you could all make it today for our first post-COVID FinTech Australia series. This new event series combines networking and content-led discussions, with each event bringing in experts to discuss pertinent topics. Tonight, we'll be discussing digital transformations in FinTech. Firstly, I'd like to acknowledge the Gadigal people of the Eora Nation as the traditional owners of the land on which we meet today, and pay respects to elders past, present, and emerging. To those joining us via the live stream, welcome. Tonight, we are joined by 3 of our corporate partners, OneSpan, Moody's Analytics, and Till Payments. They have all curated insightful panels for everyone today. And how great is the space? Thank you to Stone and Chalk. Lynn, who is somewhere right there. Yep. So this is one of the most premium, best co-working spaces specifically for fintechs. And if you are looking for a space, do reach out to Lynn. She's right there. And to kick it off, without further ado, I'd like to welcome Nigel Stewart, Country Manager at OneSpan, and the panelists who will be discussing best-in-class digital experiences made simple. Please give a warm welcome.
Okay, good evening and welcome. Bruce Emery is my name, and I'm the moderator for this evening's proceedings for the next 25 minutes anyway. But first of all, let me welcome the rest of the panel, introduce the rest of the panel. So Nigel Stewart is the country manager on my left here. Welcome, Nigel. Michael Fishpool is a fellow FinTech startup and scale-up business now. Michael is the CEO and founder of Transformed. And we'll hear a little bit about what Transform does in a few moments, but some very exciting stuff. Grant Jackson from Australian Ethical, and Grant's going to share a very interesting story tonight around digital innovation, and it's going to be extremely interesting, we hope. And Fabian, welcome to you, Fabian, as well, from Australian Ethical. Tara is also in the audience from Australian Ethical, and there are a number of other clients and guests from both Transformed and OneSpan along. So why don't we kick off the proceedings? It wouldn't be a digital innovation talk if we didn't have some real live experience, and there's a very recent experience that Australian Ethical has just gone through, and I think it's worth sharing for this audience as well. So why don't I begin with you, Grant? In terms of the digital journey that Australian Ethical undertook, I understand you've got a making life easier, making business easy. Would you like to just explain a little bit more about that for us, please?
Yeah, sure. Thanks, Bruce. We've been looking at some of our old Arcadian processes for quite a while, and there was 2 parts to this journey. Really, one was we wanted to enhance our customer experience, and secondly, we always got an awful lot of calls coming into the contact centre because paper forms that they completed where they had to, for superannuation exits and so forth, where they had to supply certified ID, et cetera, et cetera. About 50% of them would get rejected because people would get documentation, you know, their ID certified, and quite often they didn't get it right, the JP hadn't signed it, or it's been completed in the wrong place. And it's a big cause of frustration, especially where people who are doing financial hardship and need to get their hands on the money quickly. It causes a lot of angst, and not only is it a poor experience to the customer, but it also clogs up the contact centre. So we started looking at how could we initiated a project called Ease of Doing Business. You know, how can we make it easier to do business with us? You know, and we went through a lot of different areas. There was a number of streams of this program of work, and we landed on one of the areas to focus on being, how can we digitise forms? Let's get rid of all the paper and having to download it and scan it and upload it and then email it in. How could we create more of a straight-through process? So we looked at a number of the forms that we have that are customer-facing, and also another key area for us is our advisor channel. Advisors get very frustrated because having to go through a paper process. So we engaged on as one stream of this program of work, a digital journey to digitise some of our forms. And what we've ended up doing is creating a great customer experience where they can go online onto the website, click on the form, they can start filling it in electronically, got rid of all the ID certification requirements because we've integrated with Green ID to cover that off. We've now got, things like the digital signature with OneSpan. It just makes the whole process so easy. And instead of having to then print off a form, go, sign it, then go and get all the ID certified. It's a straight-through process. It all gets submitted through to our administrator, which is Mercer for our superannuation side of the business. Mercer then process it. It's less work for Mercer. They haven't got to review certified documentation. And we've gone through a journey on, we did the first form, high volume, then the next one, then the next one. So we've done about, I think, 6 or 7 to date, and it's really making a difference. And we're seeing it in the contact centre stats for the end of year as well.
That's great. Thank you very much, Grant. Has anyone had a recent experience in dealing with a superannuation fund in the room? Because if you have, you would be blown away with the amount of paperwork and the manual process and everything else. So it's an interesting journey that Australian Ethical's been on. Grant, just by further introduction, Australian Ethical's got over 70,000 members in Australia?
Yeah, we've got about 70,000 superannuation members. We also have the managed funds side of the business, but on the super side, about 70,000 members, yeah.
And just recently in the press, it's been announced that Christian Super's merging into Australian Ethical as well. So taking on a project like this in the middle of a merger with another fund must have been some heartache. What was that sort of thinking process that you went through as a board, as a leadership team, and making those decisions to move ahead on such an ambitious project?
Yeah, I mean, look, we've got some quite, an aggressive strategy. Merger and acquisitions is one of those pillars of what we're doing to actually grow our business. I don't think it's any secret that, we're targeting to become a $25 billion business by 2025. And part of that is through organic growth. We're one of the fastest growing super funds in Australia, even through the whole economic climate we've had recently. We're one of the few that's still got very strong net flows. So the merger with Christian Super, that was always going on in the background. It's never stopped us progressing against some of the other pillars of our strategy, such as the digital program. We have another pillar called a compelling client experience, where we believe that, the customer does come first. And in Super, it's all about what's in it for the member. So the Christian Super piece has been going on in the background. And I think the great thing is now we're going to be bringing another circa $2 billion from into equation, another 30,000 members, and we'll be able to extend out to that cohort the benefits of the journey we've gone through. So hopefully we'll find that somebody like Christian Super, again's working on the old Arcadian forms. They're actually with Link as an administrator. We'll be able to bring that experience to those members when that successor fund transfer completes.
Okay, thank you. And Fabian, can you describe for us, please, the sort of the internal checks and balances of the project like this, undertaking a digital transformation, and what probably also just touch on what's it involved?
Yeah, it was a challenging process because the first thing that happened when we got the forms was, oh, here you go, you have a paper form, now just make it look nice in a website. And that's not the only thing that you need to do, right? So our internal stakeholders started discussing what options we had, and then with the help of Transform, we came with these good ideas of changing the journeys. So we had the advisor teams that needed forms that could go to the clients and get them to sign them and submit everything electronically. So that was quite good. And at the same time, we were able to implement business rules within the forms, which stopped getting all those unclean forms to our administrators. And with the administrators, we also had a challenge because they had really set processes that are difficult to change. So when we implemented all these, we had to get them into the idea that we were actually doing something for their own benefit as well. And now we have a really fast process when they get all the forms straight away. And for us, our contact center doesn't need to see them anymore. Before, everyone had to just forward forms to the administrator and so on. And just to give you an example, there's one particular form that we had about 2,000 forms in the month of June. We usually expected around 10% calls just to talk about that form with our contact center, and it reduced dramatically. So now that we have all these electronic forms, we make sure that the clients actually fill in the things that we want. We put the information what they needed, and having the Green ID integration just helps so much for them, as Grant mentioned, and also the online signatures, it's a total game changer. Now, the other challenge that we had as well was all the legal and risk requirements, because they came to us and said, hold on, what are you doing here? It seems that we are the only super fund that are doing this in a public website. So most of the other funds do it through secured site, which has other security measures, whereas in our case, all our clients can access them from the website. So we obviously have all these security measures where we check who we're dealing with, but it was challenging because they still had this conservative approach of, oh, we're probably the only fund that are going to be doing this so far. But we managed to demo how everything worked, and we have an audit trail now with all these signatures online. So they were quite comfortable, and now we actually think we have a more robust process to one we had before, and we know we're actually dealing with someone because we have access to all these databases, etc., when they go through the process. So in summary, I'll say, as Grant mentioned, the whole member experience is great. The feedback has been amazing. Internally, everyone is extremely happy with what we have achieved in such a short time.
Okay, thanks, Fabian. Mick, I might ask you this next question in terms of, just for the benefit of the audience, can you describe, please, Transformed, a little bit about the journey that Transformed's been on with OneSpan and Australian Ethical?
Sure. So Transformed is a rapid digitisation platform. We're obviously focused predominantly on the customer experience side. As you've heard from the guys, forms are a big part of that, but also managing the way that the organisation processes those automatically. So one of the big sort of benefits that we bring is really time to value for the end customer. So trying to reduce the amount of time from when they start that application to when that transaction is completed, and do that in a way that also saves time for the staff. So, so typical journey would be they fill out a form, it then bubbles into the system. System is checking a whole bunch of business rules to make sure that that particular application is correct and verified with a whole bunch of external data sources. And if there's any issues or any, like you might have seven green checks, goes straight through for the processing. And if you have one amber, then it might pop up to a staff member. But when it does that, it presents all that information to that staff member so they can make a decision in seconds. And really that's what drives a lot of the improvement for the end customer, is really that time factor. The partnership with OneSpan has been really great because it really does. We have this saying that transforms the sentence, but OneSpan's the full stop. Thanks, mate. And really that transaction end is really important. So we do a lot of automation before and after signatures, and having that immutable audit trail is super important for regulatory processes. So it's been a really good partnership.
Thank you, Mick. Grant, obviously for an organisation to make such a significant buying decision and also, undertake a project, what were some of the thought processes that the leadership team went through for selecting the partnership with OneSpan and Transform?
Sure, yeah. Look, we did look at a number of different applications. I mean, once we had the conceptual idea, it was probably fortunate at the time that I've known Mike Jones here for quite a long time, who was in discussion with me about some other aspects, and we looked at this product. We hadn't actually heard of Transformed. We were looking at some of the other players in the industry. Mike introduced us to the Transform concepts. What the work that had been done with Police Bank as well, and I think what attracted us to it more so was that look, it was actually quite cost effective. It was quite intuitive. It's also easy for us as a customer to make the subtle changes that you want to make. As opposed, like if we wanted to change a URL or we want to change some text, or as we go through, as opposed to, some of the other applications that you look at are, actually you really rely on the vendor to provide that service. So where we've landed with the Transform pieces, we thought, well, look, this is really quick to market. It's not months and months to build a singular form out. It's complex, don't get me wrong, especially when you start going through some of the advisor journeys for a super application. Sounds simple, but there's so many, ifs, buts, whats, as Fabian mentioned, all the different business rules that sit behind it. So there is complexities there, but once you've actually built it, it is actually quite quick to market. Once you've actually got, it up there and it's been hosted by these guys as well, which is good, so we don't have to worry about hosting aspects. They've also taken care of all the integrations. That's what another thing we liked is that you had the Green ID integration, you had the digital signature integration with OneSpan, you got the post office lookup, there's BSB lookup, there's all these different integrations, which a lot of the other applications we looked at don't necessarily provide that whole suite. And from an operating cost, like I said, it's cost effective. We've got one of our guys who's in our web team who actually now has been trained how to make changes, can do that quite easily. So for us, it was almost like a hybrid. Look, we'll give you the heavy lifting and we'll take care of the minor stuff as we go forward. So that suite of integrations, ease to get it to market, speed to market and cost effectiveness, I think is, and that we can take some ownership is what really did it for us.
Okay, thank you, Grant. Nigel, OneSpan to me seems like an unknown brand in Australia, I guess. If those in the industry would certainly know of OneSpan, but can you just talk a little bit about OneSpan and I guess in particular, it's a global organisation. I'd be very interested to hear about what are the trends, what are the future of OneSpan.
Thank you, Bruce. Yeah, I suppose we are a little bit unknown from a brand perspective. We're the secret behind a lot of success that's happening in this industry, and the partnership with Transformed and working with the Australian Ethical team has been great along that whole digital journey, and we're seeing that there's quite a big uptake and many organisations are going through the same thing. But from a trend perspective, I suppose what we're starting to see in these digital transformations is that there is a need for the human in digital. And especially when it comes to that sort of complex or maybe a really high value transaction, that you want to be able to have the capability to inject the human component. And I don't mean calling a call centre, because I've had some experiences calling call centres, not with superannuation funds, they've been great, but outside of that industry, it's been a bit challenging. So we see a bit of a demand, and there's a technology that we have which is taking off in the US and Canada, and we're starting to see some demand, and we've got some customers testing it here, where you can actually, when you send off a transaction, it's not going to be every transaction you do, but let's say there's 20% of your transactions you feel that it's high value, really needs some assistance, or somebody maybe get halfway through it and decides they need assistance. So depending on which way you want to deliver it, if you can actually schedule this transaction to say, I'm sending you a transaction and we're going to spin up a call, a video and voice call. Now, it's not just a Zoom or a Teams call. It's fully integrated co-browsing capability with an audit trail. So these documents can be very much legal documents, electronic signing, digital signatures. So you want to make sure that if that is challenged, it stands up in court. So you've got to have all that capability built into the back of it. It's not, as I said, just an off-the-shelf type of solution. So it can be built in and scheduled, or on the other end of it is when somebody is in the middle of a transaction, they say, oh, I've got a problem. It's not just, click a button and call a call centre and be put on hold for too long. You can actually say, well, I want to schedule this for someone to call me back in 3 hours or tomorrow or next week. And then that session would automatically spin up and they can be guided through the transaction. So we're seeing quite a big demand, and I think in the Australian market, that'll start to pick up as well. The other side, when we talk about digital transformation, is everybody is going mobile, right? So everything needs to be delivered through mobile. A lot of fintech organisations here, startups, you want to be mobile first. It's a mobile first strategy. So if you're doing that, you really need, what we're seeing is there's a large increase in the number of cyber attacks on the mobile. Now, we tend to think that our mobiles are fairly safe. iOS is fairly secure, but it's real and it's happening, and there's challenges out there. Now, when you think about the application and protecting that application, so if you're a startup, and I had a conversation with a startup in New Zealand last week. Now, they've built this application, and they're about to launch in October, and they're thinking, we're concerned about this application because if somebody can get access, reverse engineer and get access to our IP, get access to the API, then we're in major trouble. All of a sudden we've got a competitor out there that's using basically a copycat technology. Because if you think about a mobile app, when you create the app, you put it up on an app store. The app store is public. Yes, there's some security up there, but you're reliant on their security, so you have no control. When somebody downloads that app onto their device, you have less control. Now, those devices, let's say that a cyber criminal downloads it, puts it onto a jailbroken Android device, for example, reverse engineers it, and then repackages and republishes, then all of a sudden you've got a rogue app up there, and people will download that app unbeknown to them, and you can get all sorts of problems. So mobile security really is something that we do across the world. We've got thousands of customers in this industry using it, and it's something that as startups and fintechs, I think it's important because you often go, get to market fast, get it out, get it built, deliver it, but you really need to think about, okay, how secure is that application? And we can certainly help in that area. So it's been exciting to be on the journey with Australian Ethical and Transformed, and I'm sure that there'll be lots more to come, and looking forward to it. And I'm sure as startups in the fintech environment, we're excited as a company to be, partnering and sponsoring, and look forward to doing more business with everybody as we move forward.
Okay, thank you very much, Nigel. Grant, can I just ask you, in terms of the future roadmap for digital transformation for Australian Ethical, without giving away too many secrets tonight, but can you give us a sort of a view of what's next on the agenda?
Oh, look, we've done so much in the last, I've been there nearly 4 years coming up, and when I went into Australian Ethical, it was like a startup itself, to be quite honest. It was pretty much organised chaos, but they'd done so well, they'd grown so quickly. And, in the period of time I've been there, we've put in, a new CMS website, we've put in Salesforce CRM, we've put in new contact centre telephony, nice. We've just done absolute loads of stuff with digital transformation. So this was, a natural progression. Next steps for us are, is looking how we take more control of the customer touch points. I think when Australian Ethical moved their administration services for Super from Link, probably back in 2017, to Mercer, they outsourced too much. So our journey has now been bringing the customer experience in-house. So our contact centre was outsourced, and we used to get a lot of problems because we were in a shared contact centre with Mercer. We're now brought that in-house. We've got a dedicated team of people who know the business, who know, the brand and the values and everything else that we stand for. So for us now, it's bringing more and more of that customer experience in-house, and the forms, I think, complements that. So we're going to continue on that digital experience, and we're going to continue building out the digital forms capability. We're really looking at building out advisor capability and default employee capability. So yeah, it's about keeping everything on track for that digital transformation. We're fortunate that we haven't got on-prem technology really. Everything we've got is in the cloud. And you know, we're not shackled by some of the legacy that a lot of other organisations have. So it's just keep moving forward, take control of customer experience, because if you control that customer experience, you know, you can retain and grow your customer base organically.
Yeah, very interesting. Thank you very much, Grant. I'd just like to open to the floor. Are there any questions from the floor? Yes, just one moment. I'll bring the microphone to you.
Hi guys, William Saunders from Multilateral Group. Taking control of the customer experience, yes. With new regulations coming through around data and data ownership, an interesting question around the control of the customer's data. All roads lead to automation, as you know. What strategies have you considered around when the time comes and you're holding customer data, how to not hold the customer data so you're not pinned down by customer data regulations?
Yeah, really good question. Yeah, we are very, very conscious of data security. I've got this guy on my back constantly, and our risk and compliance team. You know, I'm very much sort of in the business shoes, looking at the customer and the business aspects, but of course there's all those considerations that we have to take, you know, all the CP 234, and again, that was part of our, when we sort of, you know, partnered up with, well, before we partnered up with Transformed, I mean, we had a massive review of their data security, where the data's held, how it's handled, how it's accessed, blah, blah, blah. Even, you know, even passing information through to the administrator, Mercer, how's that done in a secure manner? What's the encryption protocols? So there's a whole raft of things that we have to consider there. We do have to keep, obviously, records for a period of time, but the things that are absolutely important to us is that data is not held offshore. Everything we do has to be held in Australia. You know, we obviously all used to Azure and AWS and all the security and encryptions around there. So I'm no data security expert, but I do know that we went through, and I mean, Mike can attest to that, you know, a whole raft of questions and as part of all the due diligence process with data security that we had no issues in the end, because I think most tech companies, you know, that's first and foremost now of as a given, and you expect that. But yeah, and especially in the superannuation industry, we have all the APRA that sits around it, all the SIS Act that sits around everything, and data security is absolutely paramount and the heart of, you know, anything we do. But like I said, I don't know all the ins and outs. All I know is that we went through a rigorous review with our tech team and the data team and our risk and compliance and legal as well. And yeah, what we get today is meets all those standards, but it is forefront.
Thank you very much. Are there any other questions? All right. Well, look, thank you very much indeed, gentlemen. Thank you, Fabian, Grant, Mick and Nigel. Thank you all for listening.
Thank you. Of course, compliance and risk is always top of mind for a lot of our fintechs, so I'm glad we could put this session together. Next up, we have Moody Analytics, discussing navigating emerging risks and compliance automation in fintech. Please welcome King Liu, Head of Industry Practice Leads, Asia Pacific and Middle East of Moody's Analytics, and the panelists.
Thank you. Okay. Fantastic. Can I bring on Suhaib? I've got Amy, Tom. Fantastic. All right, so we're going to shift a little bit. I know we were talking about digital experiences and delivering that. I think dovetailing into this, we're talking about a little bit about automation, but we're going to talk more about risk. So today's session is all about, navigating emerging risks, and we're going to be looking at compliance automation in fintech. So let me introduce firstly my very esteemed panelists. I've got Suhaib here. Suhaib is the financial crime lead for Oceania at Moody's Analytics. Suhaib comes with a wealth of knowledge, especially around financial crime, both within Australia and overseas. We've also got Amy Meakin. She's the Chief Risk Officer at Mint Payment. Very excited to have Amy here because we're going to hear sort of a personal journey experience at Mint Payments. And then lastly, but definitely not least, hi Tom. We've got Tom McNally, who is from Quantexa. Tom is the head of AML Solutions with very strong background, I think, banking, got consulting, has been a senior manager at EY. So definitely welcome all the panelists. So we're talking about navigating, emerging risks, right? So before we go into the automation piece, what I would love to hear, and Suhaib, maybe a question for you, when we talk about emerging risk, what are we seeing in the market, right? What are these emerging risks? We know there's a lot of regulatory changes that's going to impact fintech. What do you think is really going to be the biggest risks that fintechs are going to face? Are there changes from a legislative perspective? Are there changes from a regulatory perspective that fintechs need to be aware of in navigating the next few years?
Yeah, thanks, Gwen. So when it comes to compliance, everyone sees compliance as their enemy because they are there to stop the businesses, but that's not the case. So that's why we are helping compliance guys to simplify things. And in terms of risk, what we are seeing, when you move on to a digital transformation journey, what changes is that you move from in-person onboarding to something digital, where you don't have a visibility that who you are dealing with, whether it's a customer or a company. So during the COVID times, we have seen upsurge in identity fraud. We have seen upsurge in fake companies. So how do you control that? So do you have the right sort of data intelligence to verify the entities that you are dealing with? The key question is that who I am dealing with. So do you have the access to the right data sources? Are you able to verify that? Do you have the data intelligence to capture some sort of data to verify the company's strength, what they do? Are they in business? How long they have been in the business? Are you able to verify the ID documents online? Then when we were going through this journey, we have seen that there were some regulations from different regulators that you can do digital onboarding through the video, that you can ask them to come on the video. Then comes the challenge with the deepfakes, that they can use the deepfake to fraud you. That's why some of the innovations that we have seen, that they have asked you to move your heads from right to left, because that's when you can break the deepfake algorithm. So these are the things that are very challenging in terms when it comes to onboarding. When we move on to the next step, from who I'm dealing with, is that what is the risk of dealing with these entity? That's where you need to do the baseline customer due diligence, like you need to run the PAP and sanction check. By saying so, it seems very straightforward that we are doing the PAP and sanctions check, but we are aware that if someone is PAP or a sanctioned entity, they'll not be doing business on their names. So then comes the question of sanctions by extension. This is something AUSTRAC is also focusing these days, that they are asking you to identify if an entity is sanctioned by extension. So what it means is it could be a close associate or relative of a sanctioned entity, or it could be a company where a sanctioned entity has a control of greater than 5%, 50% of shareholdership, or as per the EU guidelines, it could be the controlling shares. So do you have the right sort of tools to identify these sort of risk associated with these entities? In addition to that, when it comes to the risk, do you have something like negative news screening or adverse media to see if there is something in the news regarding the entity that you are dealing with? Based on my experience, what we have seen is that negative news screening is good in terms of if you are going with the risk-based approach. We have seen that some entities that have been flagged in the adverse media have ended up in the watch list sooner or later. I have seen that in the Russian cases, most of the oligarchs were in the news 5 years before, and now all of them have ended up into the watch list. So are you proactive? Are you doing the right thing to implement the controls? And then comes the question, how do you bring everything together? There are so many checks to be run in the compliance world. So it's better they are not done in silo. Do you have a risk model where you can bring everything and run an integrated data check so that you can run a check and come up with a score, so that you can define a risk process or a risk category, or what you can say is a risk score for onboarding, which can help you to categorize the customer whether to be high, low, or medium risk, which can help you in the straight-through processing, so that based on your risk appetite, you can take a decision that what needs to be done. Then in terms of legislative changes, what we are seeing is that if you are dealing with company onboarding, are you able to identify the ultimate beneficial ownership, which is really critical these days. And we have seen that there have been layers of obscure elements that people use to obscure the identity. Are you able to unravel that? So these are some of the challenges that we are seeing in the market. Then in terms of regulation, there is another key aspect that we need to focus on is the trigger-based ongoing monitoring. So we have seen that once you have onboarded, everyone forgets about the customers and they don't do the refresh or the ongoing monitoring. We take it very lightly, but this is something that has been focused on very much these days. So what regulators want is that your ongoing monitoring should be based on some triggers. So as and when the data changes, you should be able to monitor that and recalculate the risk of your customer. And when you are in the digital world, you need to do things very differently. So if you are doing a onboarding form, you must be asking something like geographic risk, where a customer is coming from, what's the geographic risk associated with it. But are you capturing the geolocation through the IP or the device intelligence elements to build it into your data model, to have some sort of new data elements that could be added in your digital world to have some more agile due diligence framework. So that is what we have seen and experienced in this space.
Yeah, and hearing that, I mean, everything you've mentioned really needs to leverage on great data intelligence, right? It's got to be about automation and effectively and efficiently navigating these emerging risks. I mean, what you said about deepfakes is fascinating. And technology progresses at such a rapid pace. I mean, hearing these risks, again, automation is a key theme, right? It's impossible to do this manually. So on that point, Amy, I might pass it to you. Because obviously Mint Payment has just started this journey around automation. Could you maybe share with the audience what's it been like? What's the catalyst? You know, what started all of this? Obviously, you've got a background in risk management, so no doubt that's driven a little bit. But love to maybe share with the audience not only just the journey you've been on, but what are the challenges or perceived challenges, and any tips and advice you can share with anyone else on this journey.
Yeah, sure. So the catalyst for it was really the launch of a new product last year, so Mint EFT. That service provider that we get access to the payment rails from passed down their obligations onto us, which then means that we have to do full KYC, IDV, AML screening, biometrics. So because we took a product to market within a couple of months, because the incumbent supplier was leaving the market, we had to put an interim process in place. So we did a manual process, and then we outsourced the IDV and AML screening to a verification partner. But it was only probably a month into the launch where we just realized that it wasn't working at all, and we needed to rethink what was happening. It was too slow, it was expensive. We didn't have the control that we needed over our processes because they were outsourced. And also, we were seeing heaps of errors on application forms. So we're B2B, and we were seeing that merchants were saying they were sole traders when actually they were PTYs. They were a partnership, but a partner was being left off the application form. Incorrect UBOs, incorrect signatories. And as well, with the manual work, it takes time, it takes resources, and it's just too much stretch for the team. So instead of doing value add tasks, they were actually chasing too many documents or checking bank details, generating contracts. Easy, no value add tasks that really can be automated. So what we did is a whole heap of research. What we wanted to achieve from the project. We Googled, we did demonstrations, we did the research, and we came up with the onboarding platform that we're implementing today. So there was no product that was pre-built or off the shelf that we could actually utilize. So we had to build it ourselves with the help of a software provider that's based in New Zealand. And we've had to contract with the different data sources individually for each aspect that we need. So bank account, automating bank verification, IDV, biometrics, pulling of ASIC data, sanctions and AML screening, PEPs, watch lists, all that, and it's feeding into the one platform. So what that platform is doing, and the technology is key to this, it's consolidating the data, and then that platform is becoming the BAU tool for the team to use on a day-to-day basis. It tells you what the risk score is, if there's any flags, if there's any discrepancies in the data. And it's really going to help us within our compliance journey, because Mint has different compliance aspects. So some of our products are designated services, others are not. Some of our contracts pass on those responsibilities to others, others don't. So it's a real mixed bag. And as we launch new products in the market, that complexity is also going to grow. Now, what we needed to do as well was to completely revamp our application form because it just was no longer fit for purpose. So what we've managed to do, due to the complexity of the application form as well, it's really big. Because a merchant could have an acquiring platform, they could also want virtual cards, they could also want EFT. So it's a whole heap of different questions and information that we have to gather from the outset. We've managed to pre-populate about 40% of that application form, which will really help towards manual errors that, the manual errors that we see, and the benefits for Mint are really clear. We're getting better customer outcomes and also getting operational efficiencies. We're able to faster onboard, give that better user experience. And I'd really say if anybody wants to automate their onboarding process, think about what your business wants. Think outside the box. Get partnerships with people that will give you what you need, and they will also make sure that the platform works. So our partner that's building the software, I ask them for one thing, they go, yeah, we can do that. And that's the partnership, that collaboration that you really need within this project.
And Amy, how long did that all take? Is it all done now? Is it completely automated? I mean, I know you had your 1 month hiccup, but how long was the whole process, just for others that might be considering this process?
I started scoping it in October last year, and I did about a 3-month discovery of the different vendors that were out there and the different information sources, got quotes from those different vendors and pieced it all together. We started the builds in March, and we're going to deliver by the end of the month. So it'll be huge for the business.
Yeah. All right. And early congratulations then.
Thank you.
Fantastic. So, all right. Well, hearing that, I mean, especially all the automation process, and you said 40% of it's now pre-populated. Going back a little bit further, you were saying, like people were filling the wrong things, and I don't know if that's fraudulent or whether that is just error or people being lazy. But we all know that, it's important to have correct data intelligence. And so maybe Tom, to you at Context, obviously, a large amount of different factors go into effective and efficient onboarding, and obviously Contexta plays a big part in that from a technology standpoint. Maybe talk to us the importance of data intelligence. Again, we've seen from Amy's case, data intelligence and the accuracy of that plays a huge part. Can you maybe elaborate and talk about data intelligence and its overall importance for maybe the automation process?
Yeah, thank you. And it's actually really refreshing to hear some of the things you're saying there that kind of come into light. A lot of the things that we kind of preach a lot. And we didn't sell to Amy, so I don't think that's a sales pitch in any way. But I think there's probably a couple of pieces to what you said there. So it's data intelligence, but is that, using intelligent data to kind of automate and enrich your view of your customers? Or is it using data intelligently? And there's probably a few bits to kind of unpack and how we kind of look at it as well. So I think the first bit where we're seeing real success in kind of the automation of KYC and AML type activities is single customer view. So how can we actually get a single view of who our customer is? Do they have multiple accounts with us? Are they transacting in different ways? Are they across different lines of business within the firm, et cetera, different products, all of those different types of things. And that really enables us to get that view of context. And once you get context on who your customer is, that drives profitability through customer retention, the ability to offer better products. It kind of enables better risk outcomes as you get a true understanding of the customer's risk as opposed to a super siloed view. So that kind of single customer view is where we're seeing real success, the ability to aggregate and automate the aggregation of these disparate data sources that you need from a KYC process perspective, you need from an AML process perspective, and how do we actually reduce the burden on our operational process teams such that they're not just collating data, or looking up Google searches and going into the database and find data. How can we do all of that for them so that our resources are actually being put to use and they're making analytical decisions based off of aggregated data that's being presented to them, in a usable way. So that kind of single customer view, that data aggregation is super key. The second piece there would be around, how do we actually then enrich that? So we obviously have an internal view of our customer and the data we've probably collected at the point of onboarding. But how do we go out and use kind of external firms to understand, okay, how do I increase my customer experience by not having to bug my customers every time I want to refresh them? How can I look to leverage external data that's out there, like corporate registry data, as an example, to kind of say I can automatically build out full corporate hierarchies on all of my customers, understand all their ultimate beneficial owners, all their directors, all their shareholders, all geographies of business, all of these things that determine risk and determine an understanding of who our customer is. A lot of it we can do through the enrichment of our customers' data. So that's another way of the automation of that. How can we actually reduce the time that previously an analyst would have had to do all of that themselves? They had to pick up a phone, email, contact the customer to kind of get that view of who our customer is. And we're finding that, intelligently automating and enriching data is a way that you can massively do that.
And I like your second part where you're saying, how do we know more about the customer without having to reach out to the customer? Because even if you do reach out to customer, we all know, Amy, in your example, people might come back with wrong answers, or people just don't know their own internal corporate structure, right? Fantastic. Maybe also talking about that KYC process and automating it. Perpetual KYC is something we hear a lot about. How does transaction risk play into perpetual KYC or client onboarding? Can you maybe share a bit more about that?
Yeah, of course. So it's a big talking point. I think most people in the room have heard of, the move away from these, historic periodic review cycles or refresh cycles for customers, 1, 3, 5 refresh cycles based off of the customer's risk. And, that understanding of risk and that 1, 3, 5 periodic review is typically, a very siloed view based off of the data you collected at the point of onboarding. So it's really narrow in its kind of understanding of the customer's risk. It's, what geography are they in? What product do they have? What channel did we onboard them in? Doesn't take into account, any understanding of how that customer actually behaves or what risk that customer actually poses from the transactions they're undertaking. So coming back to your point, what impact does transactional data have on the understanding of customer risk? It's the fundamental aspect, right? And what we're really seeing is the convergence and the de-siloing of KYC and of your kind of traditional AML transaction monitoring activities into just continuous customer monitoring. You don't need to silo and have different process teams. You continuously look at customers' behavior, continuously look at how they transact and the network that they transact within and the risk that their counterparties and the counterparties pose. And that really enables you to have that kind of consistent, continuous and current understanding of a customer's risk.
Yeah, and you can only do that really with technology, right? Because that continuous, again, removing the manual allows you to leverage technology and get that continuous view without too many additional resources. Because I think, and the conversation we have here is with fintech, it's about doing more with less, right? You're not large banks, you've got limited resourcing, you're fairly lean, so leveraging technology is absolutely critical. Okay, so talking about fintechs in general, I think a question maybe for all of you. So historically, the mantra of fintech is, we're not financial institutions, right? But we've seen, the fact that they're unconstrained by many regulatory requirements that are applicable to banks. They're able to create maybe deeper customer connections, right? They're able to, more agilely navigate regulatory risk. Although with recent times, with increased, again, emerging risks that you're talking about, Suhaib, there's probably more regulatory and industry developments that we've seen that's kind of blurring that line potentially just a little bit between fintechs and financial institutions. Certainly a lot of the AML requirements, and then Amy, you said the catalyst was because you've got new products and it had to be monitored and triggered. I mean, Suhaib, I'd love to hear from you. Do you agree with that statement? Are we seeing a potential blur here? Are we seeing, the increase of regulatory requirements imposing more things on fintechs?
Yeah, there has been a shift that we are seeing in the regulatory landscape, and during the recent Senate hearing that held back in June. So there is a tranche 2 coming, which includes designated non-financial institutions as well. So even if you're not fully financial institution and you fall into DNFB category, there are certain requirements from the OSTRAC that you need to be compliant with. So that is a tranche that has been pending for a while now, and there is increased pressure on the government to implement that. And there is a financial action task force review to be done this year. And we have been non-compliant in this area for a long time. So if we are not compliant, we might end up in the grey list. So we all have been talking about the UBO's ultimate beneficial ownerships, but the sad thing is we don't have a UBO registry within Australia. And just recently, Austrac has announced that they are now implementing a registry for UBOs. So that shows that there is an intent to implement the tranche 2. So there will be more instructions coming out from Austrac that what DNFBs need to do. And once tranche 2 gets implemented, there would be more regulations coming out that you need to get comply with. And you only have technology to help you, because otherwise the cost of compliance would be too high.
Yeah.
Yeah, no, I could completely agree, Suhaib. I think one thing I'd actually add to that is kind of leaving aside the kind of regulatory requirement, aspect of this that may or may not be applied appropriately to kind of fintechs. And I think if we just flip the KYC problem on its head, right? And how can we actually use technology from a KYC aspect to really do, what we're looking to, understanding who our customer is. And by understanding who our customer is, it's not a compliance problem. It's a revenue generating problem. It's a customer experience problem. How can we retain the customer better? How can we have the customer better use our services? So I think as we start to embrace that, it's kind of goes away from being a cost center to more of a revenue generator.
Yeah. Transforming the risk to opportunity, right? I mean, I completely agree. And I think everything that we've mentioned, really, that automation process, leveraging data, it goes across. I mean, we're talking about risks here, but across all aspects of the operation, leveraging technology and data can only enhance what we do. Fantastic. So on that note, I'm going to say thank you very much to the panelists. I'm going to open it up, see if there are any questions out there. And I'll walk around with the mic. Yes, hello.
Hi, very, very interesting topic. Thank you so much for sharing that. In other countries, and I'll take the example of India, I find the federal initiatives around digital identity playing a big role in how organizations are able to smoothen this journey. In Australia, given we've taken a stand that the federal initiatives are not really what we are relying on, do you see an ecosystem collaboration being an answer to this? So are there natural aggregators for both KYB and KYC? I'm thinking organizations like, say, a Xero or a MYOB, which could be proxies to identification, which could allow acceleration of this process.
Yeah, they can. It all depends on how regulator view it. So there have been guidelines if you are bringing in an aggregator. So there are certain guidelines that you need to work with. So as long as you are following that guidelines, you can definitely bring in the third-party aggregators. But with the advancement of technology, you might not even need the third party. You can even do with lots of vendors available. You have the data aggregators that you can just connect through APIs. So open banking has been quite here for quite a while now. So you make use of the APIs to run certain checks and get the information you need. But definitely, if your preferred option is to go with the third-party vendor, that is something that you can explore. But you need to be mindful of the requirements from the regulator. That is clearly mentioned that if you're using a third-party tool to do all these tasks, if these are some sort of outsourcing, then there are certain elements that you need to make sure that you are compliant with.
Thank you, Suhaib. Are there any other questions? I'm told we've got maybe 2 minutes left. If not, I can wrap up. Fantastic. So thank you so much, Suhaib, Amy, Tom. We're going to wrap this session up and I'll pass it back. We'll do this third panel. Thank you.
Thanks, everyone.
Thank you all. Thank you, Moody Analytics, for putting this together. And finally, we have a fireside chat on a slightly different topic on open collaboration for accelerated innovation in fintech with Vinay Rao, CTO of Till Payments, and Barakat Alayan, Account Director, FIS Global Banking and Payments.
First of all, thank you guys very much for coming today. We really appreciate the opportunity for me and Vinay to share with you our experience. This is different. As a startup, we always try to do something new. So we're trying to do something new here. Instead of a panel, it's the two of us talking to each other, and hopefully we can share something that is valuable with you guys. So our topic today is to talk about digital enablement through open technology, authentic collaboration, and exploring the value of democratizing payment data to the wider economy. So first, as I said, my name is Barakat Elian. I work at FIS. I'm a senior payment specialist at FIS. And for my sins, I've been working with large financial institutions and fintechs on enabling them to improve their payment landscape. So Vinay, would you like to introduce yourself to the audience first?
Sure, thanks, Barakat. Good day, everyone. My name is Vinay Rao. Excuse me, I'm the CTO at Till Payments. Been with Till for about 9 months now. Prior to that, was at Woolies and managing their Woolies payments for about 9 years. On the board of FPOS for about 5 years, and played a large part in transforming where FPOS is today. Also been a representative of Australian Payments Network in the member committee at APN.
So for people who don't know us, before we deep dive into the topic that we have today, maybe we both introduce our organizations. So I'll start with myself to introduce FIS, and then Vinay maybe can introduce Till Payments. So FIS is one of the largest technology providers globally, and our why we wake up every morning is we improve the way the world pay, banks, and invest. Where I sit is in the way improving the world pay. And as an example, we run the FPOS hub. 90% of every transaction that goes in Australia in one way or shape touch our technology, and make me happy to wake up in the morning to know whenever someone taps their phone in one way or shape, we actually help them to enable that transaction. So that's what empowers us. And after you, Vinay, to say what makes you guys kick.
Hopefully a large proportion of those transactions come from Till in the future. And that's the pathway forward for us anyway. So Till's a growing fintech provider in the Australian landscape. We've been in the market for about 12 years or so, but we've started to grow a fair bit. And in terms of differentiation, really, and we'll get into it a little bit about API-led and what that actually means for us and why we partnered with FIS. That's our mantra about how do we sort of look at experiences that the merchants are trying to solve for, the journeys that they're trying to solve for, and how can we be API-led and help the merchants achieve those outcomes. One of the other bigger differentiators for us is sort of instant settlement. So think of a cafe owner who opens shop at 9 a.m. or probably 6 a.m. and shuts shop at 2 p.m. and wants to get paid immediately after they shut shop, so that they can plan their cash flow activities and what they need to buy for tomorrow. So that's again a major differentiator for us, and we pride ourselves being API-led because we can do things like this to make a difference in the lives of merchants and our partners. And largely, I think there's, I love the previous conversation about risk, and payments is a risk game, and we know how to manage our risk, and we know how to do it quite well. And again, it's all about APIs and how do we orchestrate some of these conversations. Amy, you know this from in your current role, and we pride ourselves in doing it quite well. And it is challenging, right? It's not an easy gig to sort of manage risk and manage payments. But yeah, that's us.
Oh, that's fantastic. Thank you, Vinay. So, well, you started with talking about APIs. So can you explain to people what an API-led strategy means in the payment landscape?
Yeah, I mean, I guess there's a bit of history to cover here, right? I'd like to start off by saying, what does, traditional payments, what was it? Like, we all knew how banks would issue cards to us, and that's all we knew as methods of payment. When we went into store to buy a pair of jeans, we would tap a card, or there wasn't tap back then, but that's how it all started, with the fact that there was no choice, or a choice was given to us. The industry has since then sort of has evolved, where customers have a lot more choice now. You can bring a QR code to a store to scan a QR code. You can bring your traditional card. You can bring your Apple, Google Pay. You can bring umpteen number of other instruments and crypto, hopefully in the future, if the market goes well. So here we've got options in terms of customers doing things that they typically do. Now, traditionally what used to happen is, if you would go to an acquirer, being any business, right, they would say, the journey really would start off by going, well, here's 10 pages of documentation, tell me about yourself. and your company. So you'd put all your directors' details in, your company details in, and and everything else that the acquirers would need for them to go ahead and do the KYC and AML and everything else. And largely they're protecting themselves. That hasn't changed. Organizations need to protect themselves, but the process has evolved. We make things simple, right? We've got tools and technologies and APIs that we can interact with partners and interact with bureaus and interact with other providers to ensure that the right data is passed, the right data points are passed to be able to receive some of this information. Now, I think the other part of evolution of where we've become a data-led and how really, and we'll talk a little bit about what data-led actually means, but historically what happened was when you go to an acquirer, when I say you, I mean a business, you go to an acquirer, you get given a payment terminal, or you get given an API to go and integrate your online stack. But that is really solving for completing a transaction. That is not solving for, do I really know my customer? So I can go and buy a pair of jeans from a store online, and I'll go and return the pair of jeans into the store in-store, but the store actually doesn't know who I am, and they don't know the credentials of how to bring these together. So what's important now with APIs and how things have evolved is the strategies of knowing your customer. We know our customer a lot better, and we can aggregate some of these things. Richness of data has become a lot better with some of these strategies. So that's the evolution of what our merchants are really looking at us for. They're looking at us for a single view of customer. They're looking at us for richer data aggregation points. They're looking at us for sort of instant settlement. Can I have this yesterday? Or can I have this now, really? Can I have my money today because I finished trade? And some of these aspects are really, really important for how we actually look at providing APIs. And when we talk about an API-led strategy internally, we really talk about journey mapping. We don't talk about APIs. We talk about what journeys do our customers really want us to achieve, or what journeys do the customers really want to achieve themselves. Where are they going with this? And that becomes really important, critical for us to sort of solve for. So journeys is sort of the most critical thing that we talk about. Now, I did speak about the cumbersome onboarding journeys that was the yesteryears of merchant acquiring, and today how it's all evolving into a digital journey. The industry has taken this one step further in partners. So partners can really white label our services as an example, right? So they can white label everything that we have, from an onboarding journey to a CRM to a transaction processing through to a portal. So what do partners actually need to white label us? They need a whole bunch of APIs. Everything that we have is white labeled. So that's really where the market's heading in terms of points of differentiation of and partners are solving for different things, right? They're not solving for the same problems that we're trying to solve for. They may be trying to solve for different things, which means that when you start thinking about white labeling APIs, it's a lot more complex in terms of security, credentials, who's accessing it, who has access to it, what are they white labeling, what data do they have access to, who does the KYC risk, is it us, is it them, or someone in between. And so there's a lot of pieces for us to solve for when we think about these things. With, again, points of interaction comes tools and developer access, right? So devs will get access to APIs, and what does that actually mean? Do they have the right credentials? Who is accessing those APIs? Do they have a sandbox? Who's playing in the sandbox? And all of those things that go with securing the APIs, securing the sandbox, securing the credentials. So I think that's the journey that we're on. We're about understanding our own merchants' journeys. We're about understanding or doing the journey mapping of everything that we're doing for our customers, and also providing the right APIs to match those journeys.
No,
Oh, fantastic. So when we touched base a little bit about your strategies for the open APIs, but when you give that access and flexibility to your merchant to access your sandbox, your data, access your real-time data for their analytics, what are some of the other strategies that you consider before venturing into this? Like, what did you consider?
All right, the secret sauce, huh? All right, okay. But, I mean, API is, again, really a complex topic, right? So we've, talking a little bit about technology here, for us to understand how critical an API is or what use the API has for the market, that is super important, as in, you know, an API that a developer is accessing in a sandbox, probably not the most critical, not the, you know, biggest SLAs from a management perspective. But payment API is very critical, super important for us to know who's accessing, how are they accessing, SLAs, uptime, redundancy, and everything that goes with it, richness of data that is going into those payment APIs, and all the connectivity that goes with it. So here's where we start. So we start thinking about catalogs and API catalogs and the criticality of those APIs when we catalog those APIs. So again, for the technologists in the room, you'll probably get what I'm saying here, but you know, it's going to the nth level of detail about how do you catalog your API and the criticality of it? Who is accessing it? What type of SLAs do we need to put on it? Do we need to put it on an active-active if you're all cloud ready environment, and so on and so forth, right? So that's kind of where we start from. What then becomes interesting with all of this is typically payments companies have a few thousand merchants, and versioning becomes a very interesting topic. So you can have merchants that are in your ecosystem from, God knows, 5 years ago, let's call it that, and new merchants that come about with new functionalities that they need, right? QR and crypto and everything else. So your APIs change, your versions change, and your maintenance and manageability of all of those change. And so does the fact that some of these APIs will need to be put on critical servers and need to be managed differently because they are regulated by the Reserve Bank and they need to be super managed effectively by it and have the right controls over it. So again, versioning is an interesting topic. There are a few different strategies of versioning, and I won't get into the details and bore you guys to death, but again, that's very interesting in how payments organizations think about these things.
Yeah, no, thank you, and that's amazing. Technology design, decisioning, and understanding your customer, in your case, your merchants, is very important. Actually, understanding your customer as any business is the #1 thing that you always have to do. But in your case, you're going after a business that traditionally been run by large financial institutions who have thousands of people to run it, spend millions and millions of dollars to actually run it and operate it. And so I want to understand and how we can share some of that secret sauce with the people here, and how you organize your team to ensure these themes are cascaded. How do you actually manage to do that and go after these very complex topics as a fintech, as a startup?
Great question, Barakat. I'm actually blessed to have a great team around me, and some of them are here in the room. They've, you know, like when we go through the journey mapping aspects of what does a merchant need or a bunch of merchant needs in terms of requirements, we really start to talk about, spend a lot of time on the why. And you know, you guys would have heard the traditional why, what, and how, and whatever else. But I think the critical aspect of it here is not just spending the time on the why, but the what becomes super important, because that drives your whole roadmap. That drives how you're building tech. What are we actually building? What's the purpose of this? Why? What are we doing? What are the merchants going to achieve out of this? And the longevity of it. The how becomes very easy because you know the guys know the why and the what, and they go ahead and build it. Now, I think another important part in you know, you spoke about cascading and cascading strategies and views. We've got a lot of friendly merchants, and merchants are really, really friendly in that they come and tell us their problems every single day, and we love that, right? And we love that because it drives our roadmap. We love the fact that they're telling us their problems because we can really relate to it. We've either heard of these problems or we've heard of challenges that that commerce merchants have, and we take it on board and you know, workshop things with them also. It's very collaborative, very two-way. They get a lot out of it. We get a lot out of it. We're, like Barakat said, not a bank, and we won't say that, hey, we put it on the roadmap, it'll come 3 years later. That's not us. So we'll put it on the roadmap and they can see things quite effectively. And because we're an agile organization, we can spike it quite simply, quite easily, and give them the value of, hey, is that what you thought did you draw an elephant on the board, or, have I got it all wrong? So there's those merits in us going through that process with our own merchants.
No, fantastic. And talking about very friendly customers, you guys are very friendly to us too. You definitely tell us when you need something.
That's for sure. That's for sure.
No, it's a great point, and actually, it's critical for any organization to understand their why. And that's why when I started today, I started by saying the FIS why. We advance the way the world pay, banks, and invest. Understanding your why as any organization, as a fintech, is very critical, right? Because that when the days are tough, that's where your team will like, do you know what I'm doing make a difference? When I wake up in the morning and I see someone using a till terminal, as an example, I paid for my used car through a till terminal by luck.
Fantastic.
It makes me happy because I was part of that journey, right? So understanding that why for an organization is really, really, really important.
By the way, we fraud checked you along the way.
So talking about why and talking about partnering and collaboration, would you please tell the audience to why you actually chose FIS when you went through the evaluation?
Yeah, I think much like what Grant was talking about in the first sort of section, partner evaluation is hard. It's very hard. You get a whole bunch of partners that claim to say they do this and do that and do whatever else, and they can pluck stars for you, for example. But the truth is we're in a regulated environment. Payments industry is a regulated environment. So with that comes the fact that you want to choose a partner that has done payments for a number of years and takes it bloody well seriously, in terms of security, authentication, making sure that the transaction, well, this is a technical term, doesn't hit the floor, and always gets authorized, right? So that to us was very important. Now we've also seen FIS just evolve as a player in the industry and starting to focus a lot about innovation. And so innovation, I think the way the lens we took was investment in people, investment in technology, the type of mergers and acquisitions they're doing, the type of investment that you're making. Your investment also to start thinking about, well, the financial space or institutions are not just about banking and retailers, they're wider than that. And how do they cater for some of those segments? And so we got a lot of insight into that side. One of the other things was for us to differentiate was speed to market. We did see some use cases that came out of FIS and also talking to some of their previous clients that they've delivered pieces of technology pretty swiftly, pretty quickly. And we've also heard stories about how they wanted to go at speed, but Bank X couldn't or didn't, or whatever the case might be. But and these are good stories, right? These are good stories to understand that a fintech is driving at a certain pace, wants to meet the needs of our customers at a certain pace, and you guys did a fantastic job at what you did. I think the last thing for us was highlight of the previous conversation, which was risk and payments risk. A lot of risk experts within FIS, and in some ways educated us about, have you thought about this and have you thought about that, and processes that we needed to improve in terms of risk. Shui is here from a product perspective, and you can attest to this. You're doing a piece of work that is talking to the whole risk elements of it, and how do we manage some of those elements. So those were sort of the criteria that we went through, and you guys came out quite, with flying colors. I think at this point, it's probably apt that I ask you as well, do you want to share your journey with us and how FIS as a company not only powers large banks and retailers, but have also invested in technologies that help fintech?
Yeah, fantastic. So FIS, we're proud to be they always say the largest fintech, but because we are an industry that is very regulated, as you say, we always have to be on our toes. But we started 30 years ago when payments, we're enabling one of the biggest schemes in the world. We're one of the biggest processors in the US, and then we built applications and redeployable microservices at the time of microservices used to be mainframe, so that we can enable critical infrastructures in countries like Australia, where we run the FPOS hub. In other countries, we run like MasterCard Scheme, we run critical infrastructure for financial institutions, but as more the payment landscape evolve, it become more and more complex. There's more compliance, there's more risk, there's more innovation and consideration. We started with card present, now we have card present, card not present. Also, the market keep advancing because criminals keep advancing, right? And when you're moving money, everybody wanna try to hack you or attack you, right? But in the last 5 years, we looked at the landscape, and thanks to the evolution of technology, as FIS, we looked at all our assets, and we said, okay, if we want to stay in the game for the next 30 years, we need to rebuild and redesign our assets. And we actually took all our applications that build on legacy systems, and we rebuilt them into microservices. We understand that when you sell to a large organization, having that flexibility platform is very important because they have thousands of people who want to do things their way, and every financial institution thinks they're the first people to do it in the world, so they want to have all the flexibility. But it comes to fintechs, they actually want to leverage the experience of companies like us and others in the market and bring them ready products, redeployable microservices, cloud-enabled, that you just can leverage all the experience that FIS had. And through the journey that we had with Till Payment, when we started talking to you, we actually didn't, they were like, oh, we're excited, FIS is a big company, let's go through it. And we're like, no, hold on. Let's actually spend 3 months to understand each other. And we spend the time with them, we ask all the questions, and we actually shape the rethinking of yourself. And you helped us reshape the thinking about stuff and how we can take that compliance, take that headache of regulatory, leverage our scale, and you do what you do best of delivering the value to your customers. So for us, it's all about leveraging our value and what we built in the last 30 years and build products that fit for purpose, that pre-configured, right? In this market today with fintechs, you guys want just applications that work. You plug to an API and off you go. And you don't want to hear about compliance and all the complexity that come behind processing payments. And FIS is proud to be a company that know how to do it. So, and we take that headache away from partners like yourself.
Fantastic. That's great insight. But let me ask you this. So when we came and talked to you about APIs and API-led journeys and strategies and what we wanted to do in the marketplace, how did you guys react and what did you do to mobilize yourself?
That's a good question, right? And we, as I said, we started our modernization journey 5 years ago, and we're still going through our modernization journey. We're still doing more and more, bringing more stuff from MQs to actually REST APIs to Java APIs, and we're definitely there now. But it was very exciting to work with a fintech rather than working for a financial institution who, when you go talk to them and say, hey guys, we actually built a middleware that you can use REST APIs today. I was like, no, but half my systems are already running on COBOL, so I can't actually use your API. So it was really exciting to work with a fintech who actually, you know what, we want to use these APIs. So we actually got into a front foot of bringing our product team with you guys. It was the first time that we actually involved our product team. We're talking about the technology that we just released instead of like talking with a lot of the customers about what we have 10 years ago, because that's what they're comfortable with. Also, communication and trust. I think we communicated, we asked all the questions that we can ask. You guys also kept us on our toes. You asked us all the questions, the hard questions, and you made sure that we bring you the best people we have in order to get the answers. And to be fair to Till Payment, they were actually very prepared. We were lucky that they went through a discovery with another vendor before coming to us. So they already had all the questions. So it was really great, yeah.
Fantastic. Thanks, Barakat. Look, I think you're right in saying that the engagement, the collaboration is super important when we go through partnerships. So yeah, thank you for that.
No, I appreciate it. Thank you. And I think communication is not only when you when you sign a deal or sign a client, it's also throughout the project. Like, it's really important to keep that governance and communication throughout the journey and the relationship with your vendor or your partner, and understand that, and you guys do it really well, that just because you signed with a partner or a technology provider, that doesn't mean the job is done, right? That's actually when the job starts. I always tell you, it's compared to moving in with your partner, right? You need to learn about each other once you sign, and you guys do it really good. And thank you for that opportunity. I appreciate it.
Awesome, thank you.
Before we leave, you guys have any questions for the two of us here? Especially to Vinay. I'm not going to answer any questions. No.
Hey, Vinay. This is a super competitive space. Like even in Australia, there seems to be so many payment fintechs starting up every day. You just sort of look at the landscape. So I'm just really interested in around what do you think, Till? And you've talked about from a strategy standpoint, but even from your customers, this is a really sticky product. To unseat an incumbent or something that they're already using is actually a really challenging sort of endeavor. So I'm just really interested in what approaches are you taking to sort of be able to unseat and get customers to even consider swapping out a payment solution?
Yeah, I mean, I think, like I said, our conversations with customers are not about the value your incumbent is providing versus the value that we would provide. We always go in with the experiences that they're trying to solve for and ignore the fact that where they are today is where they wanted to be 3 years ago. But the conversation we have is, where do you want to be 5 years from now? And just, that's the journey that we take our merchants on and our partners on. So it's a very different conversation as opposed to, yes, it's a competitive space and here's what your incumbent is doing and we can do it better. No, we don't do that. And so the conversation is very different.
Yeah, and also you're right, it's a very competitive landscape. However, having a technology that you guys are building, we're being an API led where in order to onboard a client, it used to take 3 months. Now with APIs, with yourself and other providers who are actually disrupting this area, onboarding are within minutes, and then you can actually process immediately. So actually, because this is a very competitive landscape, a lot of these providers like Till Payments have an advantage over other historical providers because their onboarding process is easier and faster. They automate the whole onboarding process.
I think the other part also is we're very transparent with our roadmaps and showcase how we're sort of prioritizing, why we're prioritizing certain things, and the value that it could bring to the merchant in the future.
Any other questions? I think we have 2 minutes before we're holding you back for drinks. I can. Yeah, everybody want a drink? Perfect. Oh, here we go.
So APIs are a great enabler, but there's still work to do. You've still got to integrate it. You still got to. So what are you doing to accelerate that path, and what are you bringing to the table that makes that easier?
In terms of developer experience, is that what you mean?
Partly, but as well as other things.
Yeah. Look, I think the thing about APIs and how do you make the experience better about APIs is the less is more. And you don't generate a whole bunch of APIs for the sake of generating APIs. You kind of hide the complexity under the hood is probably one of the things that we do quite well. And also just the journey mapping aspects of it, which is what the merchants resonate with. What are the real 3 or 4 journeys that they really resonate with, and how can we make it simple? Again, from a developer experience, the community of developers is super strong, very verbal. They can make or break your business, and that's sort of where, if you pride yourself in being API-led, you better well get the whole API strategy right and, deliver to market with speed and the changes that are required.
Yeah, and I think to add to you, also Vinay, the work they're doing after the payment, so processing the payment as you're right, it's not really much to differentiate, but also processing a lot of types of payments can make it a differentiation. But also the what you guys are doing on the merchant portal, access for data and the analytics behind the transactions after that, knowing your customers, all that tokenization and omni token, that's the great stuff that you guys are bringing to the market that I think will differentiate Till Payment, in my humble opinion.
Thank you, Barakat.
Well, thank you guys very much. Appreciate your time.
Cheers, guys. Thank you so much. Appreciate your time.
Thanks, Vinay, Barakat. I guess why we all are here is because we're so passionate about fintech and so passionate about the customer journey, whether it's a merchant or the end customer, and that just shows from all the panelists as well today. Thank you all for being here, and we're going to have drinks and networking after, so I hope you all enjoy what's left of the drinks, I assume. But 2 quick points. First, we do run a census every year with EY, primarily to understand the challenges within fintech, and that becomes our main messaging when we go to policymakers, when we talk to government and media, to talk about the challenges in the industry, whether it's capital or whether it's talent or CDR or payments and everything else in between. So all the fintechs in the room, I encourage you all to participate in that census. It's on our website, on our social media channels. So please do. And the second is Intersect. So Intersect is on the 7th and 8th of September. That is probably the biggest gathering and the most amazing gathering of all the fintechs and all the other stakeholders in the industry. So I hope to all see you there. I know Till Payments will be there. They're one of our major sponsors, but I hope to see you all there as well. Again, thank you all. Thank you, Moody's. Thank you, Till Payments. And thank you, OneSpan. And thank you to Stone and Chalk for providing the space. Thank you. Have a good evening.